Hello guys, welcome to day 3. Yes, welcome to day 3 webinar. So today we are going to talk about the moving averages. So moving average is an indicator which shows the trend. See, this indicator was designed specifically to show trend. That's why when you go to indicators here and you go to the trend, you find that the moving average is here. So the parameters here, we have the period, the shift, the moving average method, where does it apply to? So the period here, we have period 5, we have period, you can have any number here. You can even have the period 2. So in our template, we have EMAs with the period 5, period 13, period 50, 200, and 800. So the period here, when the EMA is having a period of 5, it means that it calculates the prices of the previous 5 candlesticks. When the period is 5, then it goes to previous 5 candlesticks. It feeds in data to its model. So about the model, not talk about the model. And it would anticipate for the trend, for the next trend. So if the period is 800, so it would take 800 candlesticks to know the next trend. That's why you see that the period of 5 here, the period of 5 goes along with the market because it takes a few number of candlesticks. So as the period goes higher, I mean, then if it goes to 13 to 50 to 200, then you can see that even the bending would be a little bit late because of the number of candlesticks it feeds into its model. On the part of the moving average method, see there is a smooth, the exponential, I mean the simple exponential, the smooth, and the linear weighted. But we use the exponential since the graphs that we have here have a characteristic that they are also exponential. Like the stochastic graphs are exponential. The stochastic models have a characteristic of exponential. So the exponential moving average, the model behind it goes hand in hand with the stochastic graphs. That's why we use the exponential moving average. We apply, I mean, the moving average we use apply to across. What does it mean if it applies to across? It means that it waits for a close of a candle in order to take the data, feed into its model. When it's open, when you use a moving average, which applies to open, then it uses the open of a candle. When it's high, so the high, the low, the medium price. So we use the close. So we wait for a close of a candle. I mean, the moving average waits for a close of a candle to anticipate the direction of the next. So that's the basics of the moving average. So the moving average that we use, the 5 is yellow, it's called mustard. 13 ketchup, it's red. 50 is light blue, it's the water. 200 is white, it's mayo. And you have the blueberry, the bigger one, the 800. So on our chart here, we have the 5 here, 13. This is the 50, this is the 200, this is the 800. So the position of 13 EMA on the hour 1 time frame is the same as the position of 50 EMA on the 15 minutes time frame. This is simply the moving average conversion. As you go up in time frame, you divide by 4. As you go down, you multiply by 4. Let's take a look on the division by 4. Let's take a look on this 800 EMA here. So I've drawn a box here. Let's go to our 1 time frame. You'll find this is the 200 EMA. So we divide 800 by 4 is 200. When you go to our 4, it's the 50. When you go to the daily, it's 13. See the box is around this area. You can highlight it, this one. So as you go higher, you divide by 4. As you go lower, you multiply by 4. So the 13 EMA is in hour 1 is the same as the 15 minutes. The 13 in hour 4 is the same as 15 in hour 1 is the same as 200. So the EMA crosses, this is the first thing that you should look for. The EMA crosses usually confirm the levels. The 1350 cross on the hour 1 time frame, that's a level 1 lock. So if 13 and 50 on the hour 1 crosses, this means that it's a 50 and 200 cross on the 15 minutes. That shows that level 1 is locked. Level 1 is locked. And if level 1 is locked, we usually anticipate for 2 more levels down. We expect 2 more levels down. That's like a peak lock. And for level 2 confirmation, on the hour 1 time frame, there is a 50-200 cross. So Euro-yen had a good cycle this week. So this one is the 13 and 50 cross here. This one locks level 1, and the 50 and 200 cross here locks level 2. That's the first thing you should know about EMAs. Another thing is the 5 and 13 crossover on the 15 minutes time frame. Yesterday, Euro-yen had an M here. See, there's an M here. The second leg was a little bit lower. So you find that you're waiting for the M formation. So your entry confirmation would be the candlestick here should close below the 5 and 13 EMA. And at that specific point, you should see a 5 and 13 crossover. That's an entry confirmation. You see here, there is a 5 and 13 crossover, and the candle has closed below the 5 and 13 EMA. So this is an entry confirmation, and also here there was an entry confirmation from the gap time here. So this was the entry confirmation. So when you're looking for the M, when you're looking for the W, you should enter after the crossover of 5 and 13, and the candle has closed above 5 and 13. So if you enter aggressively without the 5 and 13 crossover, we have an example today. You see this. This was a very good W here, but there was no 5 and 13 crossover. So if you enter here before the entry confirmations, it will be a loss to you. So you need to wait for the 5 and 13 crossover. That's your entry confirmation. I bet there is a question here. Is there a question there? there any question?
Nope.
Rama is here. Rama.
Now question.
It's all clear.
My brother TB is here today.
Now question today.
So let's go to other uses of EMA. We have the ID 50. So EMA can be used on a peak trade, which we call it the ID 50. So what's the ID 50? ID 50, oh, here the ID 50 was not clear here. See, here the ID 50 was clear, and here there was the ID 50. See, the dealer has formed a peak here. This is our one time frame. There is the 5 and 13 crossover on the hour one. So price came down here. It had a pullback to the 13 EMA. This is the ID 50. So this is one of the safest trades to take on the peaks. So if you miss a peak, you hunt for the ID 50. So on the 15 minutes, the ID 50 will be, this was not clear here. Gold had the ID 50 today. So the peak is here. The 5 and 13 crossover on the hour one time frame is the same as the 13 and 50 crossover on the 15 minutes. So here we have it. So price came down here and it came back for the ID 50. This here was the ID 50. This was not the ID 50 because the 13 and 50 was not there. But this one here was the ID 50. And dealer used the USD news to come for the ID 50 here. This was the ID 50. See, the 13 and 50 crossover was here. Then the pullback was here to the 50 EMA. So you wait for the price to come at this level, and the close of a candle above the 5 and 13 EMA is your entry confirmation for the ID 50. And here you wait for a close of a candle below the 5 and 13. That's your entry confirmation for the ID 50 trade. So the ID 50 trade is a peak trade when you miss the peak entry around this area. And usually this entry has zero noise because here on the peak you may enter and dealer might extend and all that. So the ID 50 is good to take when you are trading the peaks. And they usually happen. They usually happen. This one was the ID 50 here. But this is an NZD pair, so it has movement during Asian too. As LGN has no ID 50, so you should hunt for the ID 50. This was a peak reset here. Yeah. So any question there?
Well, so there is a concept where the ID 50 is only valid if the pullback is between 15 to 25 pips.
Between
between 15 to 25 pips. I remember that's what Domi said some time ago. I don't remember when, but yeah,
15
something like that.
5 pips.
To 25, I think. 25 pips. I mean, yes, ID50 is a very safe trade, and you if you're trading the peak, it's safe to take it. But usually, sometimes they get really invalidated, and any
It's for the confirmation.
well, yes, there is a number of confirmation you should be waiting for. Like I'm only asking is that the issue of pullbacks being 15 to 25 pips one of them, or it's
Like this one here.
25 pips.
How many pips was? This was 25 pips. 25. You see, I usually look on the hour one time frame to confirm if the 5 and 13 crossover is there and price has moved further. I usually don't measure the number of pips, but I just look on the because of the experience I have with it. So 5 and 13
Oh.
1 hour,
Okay.
5 and 1 hour.
Got you, bro.
Okay, let's continue on other uses of EMA. So we have the 50-50 bounce trades that we take on the moving average on the 50 EMA. We call them the 50-50 bounce trades. See, the dealer may pin the 50 EMA, and they usually happen before the gap time here. So he may pin the 50 EMA, or he may form a pattern on the 50 EMA, like this one. So this one is called the 50-50 bounce, and your entry is the same, 5 and 13 crossover, and the candle is below the 13 EMA. This is another 50-50 bounce. So these are the kind of trades that happen early. See, before the gap time, you see that there's a 50-50 bounce to take that trade. We have the safety trade. Safety trade usually occurs around 200 EMA. See, some people may call it a 200 bounce trade, but it usually occurs around 200 EMA. So we had a safety on pound card last week.
Please, because what is really the difference between the 50-50 and the ID50? Because from the example you showed, it shows that everything pulls back to the 50 EMA.
See, the 50-50 bounce doesn't happen on the peak. You see this? But the ID50 happens on the peak. Like the first pullback to the 50 EMA after the peak is formed.
Oh, okay, I get it now.
There was also a very nice safety trade on EU this week, I think.
Euro USD yesterday.
No. On Monday, yeah, it was really a work of beauty by the dealer. Because there was a pin there on the 200 EMA just above yesterday's low, and I believe that was a trade to take.
Yes, this one was a safety trade. So
True.
You know the peak is high. See, the peak is high here, and you see a visible stop hunt like this. This is a very visible stop hunt. Stop hunt to the high, And the dealer forms a pattern around the 200 EMA on the 15 minutes time frame. This is a safety trade. One of the safest trades to take. 200 EMA on the 15 minutes time frame. So around that area, it might pin the 200 EMA or it might not pin. So how can you anticipate for a safety trade? How can you anticipate for a safety trade? You go to your 4 hours chart. See, this is a peak on the hour 4. There's the 5 and 13 crossover. The first pullback to 13 EMA. So suppose the price was here and you need to anticipate that there will be a stop and high, then fall, then you would expect it to go to the 13 EMA. So the 13 EMA on the hour 4 is the same as the 50 on the hour 1 and it's the same as the 200 on the 15 minutes. So you would anticipate for a safety trade using the hour 4 time frame. So on the notes here, we had a this was a peak, 5 and 13 crosses here. So the 5 and 13 cross here is the 50 and 200 cross on the 15 minutes. And here we have our first pullback to 13 EMA. This is a visible stop and high, and then dealer dropped. So this is what happened on the 15 minutes. So since there was a quarter here, so the dealer didn't reach exactly to the 200 EMA. That's another trade that you take using the moving average. Another trade is the blueberry trade. See this safety trade here. This was also a blueberry trade. So you know the peak is high. The dealer came all the way to the blueberry. He breaks the blueberry, comes back again high, breaks it again, forms a pattern high, and then he sells. This is a blueberry trade. So you wait for the blueberry to be broken. Then he comes back high, forms a pattern there. That's your blueberry trade. So this was a safety plus a blueberry trade. So if the dealer doesn't break the blueberry like this, and you find it's forming up, he will not form a pattern. It will be a peak reset here. We'll talk about it when we talk of the resets and the daily time frame. So that's another trade that you take. Another trade is when the EMAs are close to each other. And here we talk about the 5, 13, 50, and 200 EMA. We exclude the 800 EMA. So this was an example of, this is an example where the EMAs are close to one another, like they are close to each other. So many occurrences, the blueberry is not there. So you know that the peak is low here, and dealer is trading around this area. It forms a pattern here. Price usually runs away very effectively. So if you take a trade there, it will be a good trade to take. Price usually runs away effectively. So when you go mark your charts, you see here the closeness of the EMAs. So sometimes a blueberry trade might occur with this. I forgot to tell you. Like the dealer might break and retest the blueberry. This is also a blueberry trade. A break and retest to the blueberry. So here the EMAs were close to each other. There's a break and retest to the blueberry. There is your entry. So today we talked of many entries using the EMAs. See the importance of the EMAs on your charts. So any question there? Any question?
Can you go to the chat USD card for
Yes,
today?
you can.
USD card, because I took a loss on USD card today, thinking I was able. Yes.
And trade here.
Yeah, I took it straight after like the W, after this pin bar down here.
So you should have waited for the entry confirmation. I was waiting for the entry confirmation in order to enter here.
Oh, okay.
All right, question there. We still have half an hour. Let's continue on the resets. The resets in the daily time frame. Good example here, we have the USD Swiss franc. So this is the daily time frame for USD Swiss franc. So I want you to have a shift of knowledge here. See the knowledge you had on the hour one time frame about the peaks, about the levels, you shift them on the daily time frame. So you see a peak on the daily time frame like this one. This was a very good peak on the daily time frame. So the dealer used many days to form this peak. So when you go to our one time frame, you find it's a very big peak. You cannot see it here. On the hour for this one, a very good peak. So on the daily time frame, we find there's a big peak like this. So, hello. No.
I got a question, but I see
Okay.
the host is left.
He's back. He's coming back.
I am back.
You're back. It's just I need a clarification on Euro USD for today. Can you go to Euro USD?
And who is talking anyway?
Yeah, it's Mr. Hope.
Of Jakarta.
All right. Is that a kind of safety trade? Oh,
A safety
just
trade.
I need a clarification. Yeah, because I see in 1 hour, I can see the safety. The
Usually,
pickers. Yeah.
usually I take my safety trades after the 50 and 200 crossover. Like the first pullback after 50 and 200 crossover. That's a safety to me. But down here,
All right.
down here will simply be the inducement to other retail traders to take short trades. So this will be a retest on the. See, this is like a trend line. I'm moving. It's like a trend line here. So this will be the third touch and it will be the third level. So that's not a safety to me.
Okay, I got you.
Okay.
Got you. Yeah.
So let's talk of the peak resets. Let's first define what's a peak reset. So a peak reset occurs when the dealer forms a peak on the same direction as the previous peak. So here